Brent, Palantir on pace to break a 4-week losing streak.
Yeah, I mean, Palantir was an AI company before AI was cool. This is without a doubt. I think there's no other software company that has the scale of the military contracts. And I think it's a misunderstood company because that's what most people think it still does. They continue to get big awards from US and US friendly countries. But really what I'm excited and why I bought the stock is what they're doing on the commercial side. They've been doing these within their AI platform, these AI boot camps. Last quarter, that was up 70% year over year. Their commercial revenue, just plain and simple, was up 30%.
Explosive growth, financial analysis, and competitive positioning. We've all seen Palantir Technologies making waves in the stock market lately. With its stock surging by 18% in 2023 and another impressive 32% year-to-date, it's hard not to take notice. In this video, we'll delve into Palantir's recent performance, dissect its financial data, and explore what lies ahead for this AI-powered titan. So, what's driving Palantir's explosive growth, and where might it be headed next?
The stock made 3 cents, the earnings 3 cents last quarter. I think this is early days for them. They're hiring a sales team to really go after the commercial traffic. I think that they're so trusted. Their earnings come out at about 9 or 10 days. I think this is one to watch that has a lot more upside.
Back in 2023, Palantir stock experienced a remarkable upswing, reflecting a growing positivity surrounding its business model. Bolstered by the increasing prominence of AI-related stocks, Palantir surged by an impressive 18%. This upward momentum continued into the following year, with a staggering 32% surge in its year-to-date performance alone. The company's earnings report for Q4 in February further solidified the confidence in its trajectory, particularly with the traction seen in its AI-related endeavors. One notable development was Palantir's collaboration with Oracle, which aimed to provide secure cloud and AI solutions to global enterprises and governments. Through this partnership, Palantir's platforms, including Foundry, Gotham, and AIP, gained accessibility via Oracle's cloud infrastructure. The demand for Palantir's AIP has been robust, with boot camps showcasing the advantages of AI integration, contributing significantly to its U.S. revenue growth by over 70% year over year. This strategic collaboration with Oracle played a pivotal role in Palantir's overall business expansion, with a noteworthy 25% increase year over year. Oracle's substantial investment of $10 billion to expand its data center capacity further enhances Palantir's growth opportunities. Looking ahead, both companies are poised to benefit from the projected 36% annualized growth rate in AI-related cloud offerings, positioning them favorably in their pursuit of growth. But did you know that Palantir Technologies recently forged a strategic partnership with Hyundai? This collaboration marks a significant milestone in Palantir's journey, especially considering its renowned clientele like the U.S. Department of Defense. In its pursuit of innovation, Hyundai has joined with Palantir to merge Avacus's autonomous navigation software with Palantir's AI mission autonomy technology. This partnership holds immense potential, particularly in the context of Hyundai's ambitions to pioneer the unmanned surface vehicle market. Ju Won-ho, the head of Hyundai's naval ship unit, expressed confidence in the joint technological advancements that will revolutionize the USV landscape. With Palantir's extensive experience and Hyundai's drive for innovation, the collaboration is poised to redefine the future of autonomous navigation and AI integration in the maritime sector.
They are the original AI software data analytics firm. We know them from their military contracts. Their commercial business is exploding to the upside. They're rebuilding the company. This is very exciting. So I think it's got a really long room to run. It's under-owned, I think misunderstood.
Now, let's look at an investment group's thoughts on Palantir. In the final quarter of 2023, Palantir saw substantial revenue growth, up by 20% year over year. The full-year revenue for 2023 increased by 17%, reaching an all-time high gross profit margin of over 82% by the end of Q4. Particularly noteworthy is the significant growth in Palantir's U.S. commercial revenue, which surged by 36% year over year to $457 million. Moreover, Palantir's government revenue also increased, albeit not as substantially, rising by 14% year over year to $1.2 billion. This revenue growth, coupled with a relatively modest expansion in operating costs, resulted in widespread margin expansion. Palantir also reported positive GAAP net income for 2023, amounting to approximately $210 million, with a 9% margin, and GAAP income from operations stood at $120 million, representing a 5% margin. Furthermore, Palantir generated positive cash flow from operating activities throughout the year, with CFO reaching $712 million, reflecting a 32% margin. and adjusted free cash flow at $731 million, a 33% margin. Notably, the fourth quarter of 2023 showed a peak in both metrics. The company also managed to decrease its stock-based compensation expenses by 15.74% year-over-year, accounting for only 21.34% of total revenue, compared to 29.61% in 2022. Palantir's success can be attributed to its adoption and integration program and boot camps, which have exceeded expectations. As of February 5, 2024, Palantir had completed over 560 boot camps in 465 companies. Palantir's total addressable market is expected to expand significantly, driven by the global trend of integrating AI into operations. In addition, some may perceive Palantir's projected EPS growth as overly optimistic, especially considering the high percentages forecasted for 2024 and beyond. However, it's crucial to consider the context. Palantir has recently achieved profitability and is starting from a relatively low base. Drawing a comparison to Amazon's historical performance illustrates how exponential growth can occur from a modest starting point, especially with favorable market conditions and margin expansion. Given Palantir's current stock price nearing its peak, some investors may hesitate to buy in at current levels. Yet, constant anticipation of a significant market correction can result in missed opportunities. The company has consistently outperformed Wall Street expectations, as seen throughout 2021, suggesting potential for further upside, especially with the upcoming Q1 2024 earnings report. Regarding Palantir's valuation, while its price-to-earnings ratio may appear high, evaluating it from an EV/EBITDA perspective reveals a different picture. The market anticipates a significant contraction in multiples, indicating that Palantir is actively growing in its valuation. But before we move on, we just want to thank you for watching this far. Now, what do analysts and industry observers predict for Palantir stock? From Hargreaves Lansdowne, Susanna Streeter notes potential personnel challenges due to CEO Karp's outspoken views. Despite this, she acknowledges Palantir's success in providing effective AI platforms, especially in the defense and corporate sectors. Streeter highlights Palantir's innovative sales techniques, like immersive boot camps, which help clients envision AI applications. Dan Ives of Wedbush Securities recently raised his Palantir share price forecast, showing confidence in the company's future. From AJ Bell, Danny Hewson highlights the market's search for the next Palantir, considering its remarkable share price surge and customer growth. However, Malik Ahmed Khan, an equity analyst at Morningstar, offers a more cautious perspective, with a fair value estimate lower than the current stock price. Despite differences in opinions, analysts generally expect Palantir to see significant revenue growth in the coming years, driven by both governmental and commercial sectors. So, if Palantir's valuation and technical analysis are causing concern, addressing these risks is essential. Data from Seeking Alpha's quant system shows a worsening valuation grade for Palantir, making it relatively expensive in its industry, even with estimated EBITDA growth. Additionally, technical analysis indicates a potential price correction based on the formation of a head and shoulders pattern on the daily chart. Despite these risks, there are fundamental reasons to remain optimistic about Palantir. The company has been consistently improving its margins, demonstrating the sustainability of its business model. Moreover, Palantir has expanded its total addressable market significantly, setting the stage for robust revenue and earnings growth in the coming years. The company's decreased reliance on stock-based compensation is also a positive development. But if we distill the analysis down, here are the key takeaways. Palantir has shown impressive revenue growth and margin improvement, signaling its potential to capture a significant share of the expanding AI market. Despite concerns about valuation and technical indicators, the company's fundamentals remain strong, with a growing total addressable market and reduced reliance on stock-based compensation. For potential investors, the recommendation is to consider Palantir's long-term growth prospects alongside the risks. While there may be short-term volatility, the company's solid business model and expanding market opportunities suggest the potential for significant returns over time. However, investors should remain cautious of the high valuation and technical patterns indicating possible price corrections. So, are you ready to invest in Palantir's future potential despite the current uncertainties? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about Palantir stock, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.